Extraterritorial impact of the USA PATRIOT Act on non-U.S. financial institutions. The USA PATRIOT Act significantly affects non-U.S. financial institutions because many global banking activities rely on access to the U.S. financial system. Even institutions located entirely outside the United States may become subject to U.S. AML requirements when they maintain correspondent accounts with U.S. banks, process U.S. dollar transactions, or engage in activities connected to the U.S. financial sector. The Act expanded regulatory oversight and law enforcement authority in response to money laundering and terrorist financing threats. Consequently, non-U.S. institutions must understand how their operations intersect with U.S. jurisdiction and ensure compliance with applicable AML obligations to avoid regulatory action and reputational harm. Correspondent banking and investigative authority. A key scenario involving extraterritorial application occurs when a foreign bank maintains a correspondent account with a U.S. financial institution. Under the USA PATRIOT Act, U.S. authorities may require information relating to transactions conducted through these correspondent relationships, including records associated with accounts maintained outside the United States. Financial institutions must therefore maintain robust record-keeping systems, customer due diligence procedures, and transaction monitoring controls. Enhanced due diligence requirements may apply to higher-risk correspondent relationships, particularly those involving offshore banking institutions, politically exposed persons, or jurisdictions with weak AML/CFT frameworks. These obligations extend the practical reach of U.S. AML enforcement beyond domestic borders. Section 311 and its impact on foreign institutions. One of the most powerful extraterritorial provisions of the USA PATRIOT Act is Section 311, which authorizes the U.S. Treasury Department to identify foreign jurisdictions, institutions, transactions, or account types as primary money laundering concerns. Following such a designation, special measures may be imposed, including enhanced reporting requirements or restrictions on correspondent banking access. For non-U.S. financial institutions, being associated with a Section 311 designation can result in significant operational and reputational consequences. Many institutions worldwide monitor these actions closely because access to the U.S. financial system is often essential for conducting international business and maintaining global banking relationships. Compliance model for non-U.S. financial institutions. The CAMS framework emphasizes that non-U.S. financial institutions should adopt a risk-based compliance model to address extraterritorial AML obligations. Key elements include customer due diligence, beneficial ownership identification, sanction screening, correspondent banking oversight, transaction monitoring, and effective governance structures. Institutions should understand how customers, products, services, and geographic exposure may create links to the U.S. financial system. Regular risk assessments and employee training programs help ensure compliance with evolving regulatory expectations. By proactively managing these risks, financial institutions reduce their exposure to enforcement actions, maintain access to global markets, and strengthen confidence among regulators and counterparties. Overview of FATF-style regional bodies, FSRBs. FATF-style regional bodies, FSRBs, play a critical role in promoting global AML/CFT standards by supporting the implementation of FATF recommendations within specific geographic regions. While FATF establishes international standards, FSRBs extend those standards to jurisdictions that may not be direct FATF members. These organizations collaborate closely with FATF and help ensure consistent application of AML/CFT principles worldwide. Examples include the Asia/Pacific Group on Money Laundering, APG, the Caribbean Financial Action Task Force, FATF, and other regional organizations. Through education, cooperation, technical assistance, and assessments, FSRBs strengthen regional capacity to combat money laundering, terrorist financing, and proliferation financing. Key roles and functions of FATF-style regional bodies. The primary functions of FSRBs include conducting mutual evaluations, promoting implementation of FATF recommendations, providing training and technical assistance, facilitating information sharing, and encouraging regional cooperation. Mutual evaluations assess both technical compliance and effectiveness of AML/CFT regimes within member jurisdictions. FSRBs also help countries identify weaknesses, develop corrective action plans, and strengthen institutional capacity. Through workshops, guidance documents, and collaboration among regulators, law enforcement agencies, and financial institutions, regional bodies promote best practices and enhance understanding of emerging financial crime risks. Their activities contribute to a more coordinated and effective global response to financial crime threats.
Overview and objectives of the Egmont Group. The Egmont Group is an international organization composed of financial intelligence units, FIUs, from jurisdictions around the world. Established to improve cooperation and information exchange, the Egmont Group supports the global fight against money laundering, terrorist financing, and related financial crimes. FIUs serve as national centers responsible for receiving, analyzing, and disseminating suspicious transaction reports and other financial intelligence. Recognizing that financial crime frequently crosses national borders, the Egmont Group provides a secure framework through which FIUs can collaborate and exchange information efficiently. This cooperation enhances the ability of jurisdictions to identify and investigate complex financial crime networks. Key objectives and strategic importance of the Egmont Group. The Egmont Group's primary objectives include fostering international cooperation among FIUs, enhancing information sharing, improving analytical capabilities, and supporting the development of effective financial intelligence systems. The organization provides secure communication channels, training programs, operational support, and guidance designed to strengthen FIU effectiveness. By facilitating timely exchange of financial intelligence, the Egmont Group helps authorities trace illicit funds, identify criminal networks, investigate terrorist financing, and support law enforcement actions.